And when people tell me they managed to outperform the S&P 500 over a longer period, I'm usually very skeptical. However, when my favorite stock research platform of choice, Seeking Alpha, came out with a tool outperforming the S&P 500 by almost 3 times over a 2.5-year period, I of course got very interested, and that's why in this video I want to review the tool called Alpha Picks by Seeking Alpha, show you what it is, how it works, how they actually performed versus the S&P 500, and finally give you my honest feedback whether I think it's worth it or not. So the tool I'm talking about is called Alpha Picks, and it's inside Seeking Alpha. Now, I used Seeking Alpha Premium myself for a number of years. I really love the platform. I can really honestly recommend it for anyone. They obviously have a free plan as well to get you started, but I generally believe that upgrading to the premium plan does really offer a lot of value, benefits, and insights. Really love how simple Seeking Alpha is to use in general. And yeah, as I said, I mean, I use it for pretty much most stock researchers to really get some nice deep insights into the company. Very easy for me to compare it to the S&P 500 performance. And they're also starting to integrate more and more AI throughout the platform. For example, on the premium plan, you can get a company snapshot about how the company is doing, certain evaluations and so on. However, in this video, I want to talk about Alpha Picks. Now, obviously, Alpha Picks is an added service inside Seeking Alpha. And if you want to get access to it, I do have a link, which I'll leave down in the description below. And with that, you're going to get a nice juicy discount depending on when you watch this video. And if you're completely new to Seeking Alpha and maybe also want to have the premium included in it, you can sign up to Alpha Premium Picks and Premium with my link. And you really have some massive savings over there. I know it's a big amount, but you're going to get a lot of value out of this, which I'm going to show you in this video. Now, full disclosure, I'm obviously an affiliate for Seeking Alpha and I've worked with them for a number of years myself, and they have been kind enough to grant me access to Alpha Picks to check it out for myself. So once you signed up to Alpha Picks, obviously you have that button, you can click into this and then you get access to that Alpha Picks section over here, which normal premium users won't be having. And honestly, it's really straightforward, very clean, very organized, and I really like it. It's not too overwhelming. First off, you're going to be greeted by this analysis. So you see here is really regular analysis that you're going to be getting and really deep insights. You can see here, it was last one on 7th of February, 6th of February, 4th of February. So every few days, you're going to get some really detailed insights. And I can just open up one over here, the market recap. And honestly, obviously you get a lot of free news on CNBC and so forth. But here, what I really value is honestly really spot on and very, very good insights that I didn't find as detailed on other places. I really enjoyed reading them. And what I equally enjoy is actually the comments, because you can see over here, only people who are inside Alpha Picks, they can actually comment as well, right? So for me, that alone sometimes gives me more insight than the article itself, because these are people with money. Obviously, they have money to invest. So their way of thinking can sometimes also influence your way of thinking. You get the pulse of what's happening. So for me, it's really, really insightful to connect with other readers and really just see how they think about things. So I really value that. But of course, the big question is, how did they actually perform? Well, let's dive into this. And well, if I look at the performance over here, it has almost 3x the S&P 500 returns. That's since July 2022. So maybe it's not such a long track record, right? Normally I like to look at 5 or 10-year performance, but they only started in July 2022, but it's still more than a year, right? Some people talk about the performance over 6 months or 1 year. That's for me not enough, but 2.5 years started to become quite a nice time period, and managing to outperform for that long, really kudos to them. Now, obviously, this is not set in stone, right? It can fluctuate. Next month, it might be higher, it might be lower, and it's no guarantee, right? Just because they performed so well in the past doesn't necessarily mean it's going to continue that well, right? Past results are never guarantee for future returns. You can also change over here the time period year to date since the beginning of this month. It's up versus the S&P over a 1-year period. It's almost double the S&P. Over 6 months even, it's still up more than double the S&P. Over a 3-month period, it's pretty much neck to neck. Over a 1-month period, once again slightly up. And since inception, we looked at, it's massively up on the S&P. And obviously over here, you see all the various companies. Right now, they have around 30 holdings, sometimes a bit more, sometimes a bit less. But yeah, you see basically the company over here when it was picked, the purchase price at the time, whether it's closed, but it's not closed right now. I'll show you this in a second as well. The sell price, if it's relevant, it goes into the sell, but I'll show you this in the portfolio section over here. You have the return so far versus the S&P 500, SPY, that's the ETF basically, and the difference. So with this, I can actually jump into the portfolio and show you how that looks. And obviously, I can't show you all of the stocks because that would kind of, not be fair to Seeking Alpha, because, that's the whole point of having that secret portfolio, of having those individual stocks over here. But you get an idea over here of some of those. And to be honest, except for PayPal, I haven't heard of any of them. So really quite unique and unusual companies, which I like. And once again, I'll come to that in a second of how they're being picked, especially those companies. And here you see obviously the symbol, when it was picked, the return so far, the sector that's in, the rating, of course, that's very important, and holding as a percentage in the portfolio. So out of all those companies, how much of that is the weighting, right? Same as the S&P 500. The most valuable company obviously has a higher weighting than the 500 biggest company. And from here, you can very easily add it to your portfolio. It's like a watch list, right? And then you can track it in there as well if you wanted to. So, it's just an easier way to track those stocks. And from here, you can also very easily click into the company and you get like a deep dive analysis on what it is and why they picked that stock in the first place, right? And it's really in-depth, detailed of what it is, the buying thesis over here, the stock growth, profitability, outlook, and so forth, valuations, potential risks. So really well-rounded analysis, and I really enjoyed it. And once again, the cool thing is you have here the feedback from users, people actually paying for that service, and give their raw, honest, unfiltered view on it. So I really value that, because obviously these are just buying recommendations. It doesn't mean you have to buy all of them. It's just food for thought of companies that they added to their list that have traditionally done quite well, at least some of them. But honestly, really, really nice. And yeah, once again, I like the comments equally, because if you go on Twitter or some other social media comments, anyone can comment. So here you don't have bots or some random guys or some haters. These are really real people who bought a real subscription. So yeah, some really good insights over there. And from here, you also have the closed deals, because obviously they buy and sell certain stocks. So if I go into closed, you see all the stocks that they have closed at a time. And for example, if I filter over here by return, you will see some of those stocks really closed with a major profit, almost 1,000%, right? Incredible. In less than 2 years, returned them 1,000%. Unbelievable. Now, of course, on the flip side, if I filter to the bottom performance, you naturally also have some companies that were generating a loss. And that's totally fine, right? Because even inside the S&P 500, not all the companies, even if the S&P is up, means all of them are doing well. You will have some companies that are really doing well, but the majority of the companies often dropping in share price. And that's why we buy an ETF in the first place, to get average returns, right? From some top performers and some bottom performers together. Hopefully the average is positive and increasing in price. And the same, in a way, you can say it's over here. It almost becomes an ETF, a collection of stocks that you're buying. It's not just one individual share that they recommend you to buy, but really a collection. Some of them will do exceptionally well, as we've seen before, with almost 1,000%, while others have a slightly lower return or maybe a loss, but on average, all put together, well, so far, as we saw, it managed to outperform the S&P by almost a 3x multiple. Now you may ask yourself, Kai, that's all nice and well, but how is it actually composed? How they do come up with those stocks and what to include and when to sell? Well, let's go through the methodology of how they compose that. So I really like it's very much data-driven methodology, right? It's not just some random guy sitting in the office cubicle and coming up with his next new idea that he recommends you should be buying, but really a combination of Seeking Alpha's quantitative team. So there are physical people, I'll show you in a second, working there. But of course, very strong reliance on the computational power of systems that they're using inside of Seeking Alpha. So putting those two together and through their criteria, they're coming up with those stocks, when to buy them, when to sell them. So how is the portfolio process actually working? Well, they actually outline it here very nicely. So they basically adding 2 new stocks every single month, more or less. The first one on the first day of the month and the second one in the middle of the month. And they have certain criteria that they use in order to choose which stock to include. Now, first of all, this stock needs to have a strong buy quantitative rating from Seeking Alpha platform itself, and the stock needs to have this rating for consecutive 75 days, because some stocks, they go up and down in value. So sometimes it's a strong buy, sometimes it's a sell, right? So here it has to be consecutive. So very consistent stock performance. Then the company also needs to be a US stock listed company, right? It cannot be listed in Europe or in Asia or elsewhere. It has to be listed in the US on stock markets like NASDAQ or New York Stock Exchange, one of the big stock exchanges in the US. It cannot be a REIT, a real estate investment trust. That's something to consider as well. And it needs to have a 3-month average market capitalization of greater than $500 million, which I really like, right? Because sometimes if they're small cap, like 10 million, 20 million, it's really volatile. So you want to have more mature companies in there. As well, the stock price has to be greater than $10 at least. That's something to keep in mind. And lastly, it should not have been recommended over the past year. So if they had a company already that they had in the portfolio and it sold out of, in the last 6 months or so, it cannot be once again included for at least another year. Now, what about selling? Well, they also have a nice criteria for that. First of all, whenever they make the decision to sell a share, they will immediately send emails to the subscribers of Alpha Picks, so you'll be informed right away and then can go into your stockbroker of choice and then obviously go ahead and sell if you wanted to follow really Alpha Picks recommendations. So first of all, the company needs to have a rating revision of the quant rating to either go sell or strong sell. As soon as the new rating is a sell or a strong sell, they would definitely go ahead and sell and close their position. Alternatively, when the rating falls to hold or remains at hold for 180 consecutive days, that will be another criteria to trigger a sell order. Or the company announces a merger and acquisition, but is the target, so they are being acquired, and that would also trigger a sales order. And lastly, if the stock reaches a weighting inside the portfolio of more than 15%, means it becomes too valuable inside the portfolio, right? Because the value, let's say, increased so much, it becomes too much concentration on that. So it would be trimmed down to 10% of that portfolio to avoid concentration. And those profits, they would then basically be equally redistributed across all the other holdings. They also talk about how they let their winners run, which is good, right? Because sometimes some stocks, they go up a lot and we think, whoa, we made all the profits, but sometimes they keep on going up, right? So they have a strong methodology in place also how they benefit from winners and let them run and obviously take profits along the way. And then they also mention how they reinvest the profits, because some of those companies are dividend paying companies. So if the company pays a dividend, they actually reinvest those dividends into the company that paid the dividend in the first place. And lastly, they talk about how they actually calculate their performance. And I really like that they rely on S&P Global, which is basically the company behind the famous S&P 500. It's a global rating agency. They are an independent third party to calculate the return. So it's not just them randomly choosing which figures to show and what to include in the calculation or not. So it's really transparent and I really like that. So in a snapshot, once again, the style is really designed for buy and hold investors, right? It's not like trading, 10 times a day. It's really long-term investing and trading. Yes, you pick individual shares, but it's really for long-term capital growth. They said it over here, we aim to hold positions for at least 1 year, right? So they're not really entering and exiting within a couple of weeks. So it's not swing trading, but really long-term investing, right? They aim to have around 2-3 trades per month. Right? So that's also something to keep in mind, which I think is reasonable and appeals to a lot of people because, if there was 2-3 trades a day, if you work full time somewhere, it's hard to keep up, right? To follow all these changes. But 2-3 trades a month, I think is reasonable for any of us who are, kind of interested in investing, but don't want to spend too much time. I think it's feasible. And of course, as I mentioned before, the companies need to have a market valuation of over $500 million. So in addition to following the data from the system, they also have 2 seasoned people really running Alpha Picks. One is Steve Kress over here. Really smart guy. He has his own quant hedge fund and investment research company and used to work in Morgan Stanley. Another gentleman, Joel Hancock over here, used to work at Goldman Sachs, Morgan Stanley, E-Trade. So definitely 2 sharp guys, but again, we're not only relying on them, but they obviously use the data that they have available inside Seeking Alpha and base their decision based on the methodology. And with those 2 together, make the decision what to buy, what to sell. And well, once again, numbers speak for themselves. So far, they definitely did a stellar job. Of course, the question is, what do you do with that information? Well, if you're a new subscriber to Alpha Picks, you really have 3 options, right? The first one is you can go ahead and buy 5 of the strong buy rated Alpha Picks. So you basically just go into the portfolio over here and then you filter by rating. And then you have a number of companies that are currently rated strong buy. So you can pick a number of those. They say at least 5, ideally more, because you don't want to just have 1 or 2, because then you're very, very concentrated and you may not end up with the same numbers they are having. So ideally, you want to have at least 5 of them. However, even better, if you really want to follow them, is to buy the entire portfolio, what they have, currently around 30 stocks or so, even with the allocations, right? As I've shown you before, if some company has an allocation of 0.82%, so the total amount that you have, let's say $1,000, $10,000, whatever is your investable amount, of that 0.82% in this case should go to Lending Club Corporation, right? If you really want to follow that. And then once you set it up, that might take you a little bit of time, but once it's there, you just let it sit there. And then obviously, as soon as you get informed of any sales, you just go into your broker and sell the same. Or whenever you get a new buy order of a new stock, you go ahead and do that new buy order. As I said, 2-3 trades per month really doesn't take you that long. The first time setting it up, yes, it might take you a little bit, but once you set, it's pretty straightforward. But of course, lastly, you might also just want to take it as an idea generation tool, right? See some of those companies, as I've shown you already, a lot of those companies I never heard of, right? So maybe you don't want to invest all of them, but some of them, right? Personally, when I saw, for example, PayPal, which was also recommended over here, that's not a company I'm super excited about. But ultimately, if I was to follow that, I would probably choose the second one, set it up once, follow all of them, knowing that some of them will underperform, but some others, as I showed you before, will really massively outperform, that hopefully over time I can mimic, an outperformance of the S&P 500, which of course would be awesome to achieve. But of course, as always, none of this is investing advice. These are just recommendations. Ultimately, it's your own money and your own investment decisions. So what do I think about it and who would I recommend it for and whom would I not recommend it for? First of all, honestly, I've been really impressed with it. I think it's really not too overwhelming, quite simple, quite straightforward. But apparently the performance has been really stellar, right? Numbers don't lie. So I gotta give them credit for that. Now, who would I not recommend Alpha Picks for? Honestly, if your investable amount is less than, let's say, €1,000 or dollars a month, then probably it wouldn't be that relevant. Because despite the discount that you would be getting with my link, it's still quite an investment that's on an annual basis, but that would already take out quite a bit of returns from your investments. And secondly, if you're a pure ETF investor, set and forget it. You like S&P 500, NASDAQ 100, or a global all-world ETF that's diversified, and you don't want to bother with having to log in and kind of follow those trades, then it may also not be for you, right? You want to set and forget it, and that's totally fine. That's what I invest myself, right? I have my real estate, Bitcoin, and ETF holdings, both S&P 500 and NASDAQ 100, and I'm really happy with that. However, I must admit, quite honestly, looking at those returns, of course, I also get a little bit tempted to have a higher return than the S&P 500, right? While I'm happy generally with 8 to 10%, getting 20 or 30% in the long term, I wouldn't say no to that, right? And that brings me to the point who I would recommend it for. Anyone with an investable amount of over $1,000 or euros per month, I think it would definitely start making sense, because then if you manage to outperform the market, that incremental performance growth will definitely offset that initial investment that you have for the tool. Because let's be honest, if your total portfolio is, let's say, $1,000 and you manage to return a 10% annual return versus a 20% annual return, it's double return, sounds amazing. But ultimately, that's a difference of $100 to $200. But if, let's say, your portfolio is $100,000 and you return 10%, which equates to $10,000 or 20%, all of a sudden that would be $20,000. That would be a huge difference, right? And then all of a sudden, that amount that you put into Alpha Picks on a monthly basis is actually peanuts. So personally, I got very intrigued looking at this. I will surely continue with my 3-pillar investment strategy. But I am interested to potentially give it a go and maybe use one of my brokers to replicate those stock buys and kind of see how it goes. So this could potentially turn into a mini series where every month or every 3 months, I give you an update of how that Seeking Alpha Picks portfolio is doing. So that way I can really share my honest experience following their advice and see how that performs versus the S&P 500. So if that sounds interesting to you, let me know in the comments down below. And if I hear from a few of you about that request, I will definitely make such video series. Hope you enjoyed the video. If you did, give it a like. Definitely check out the links to grab that juicy discount for Seeking Alpha, whether it's premium, Alpha Picks, or the whole bundle. You'll definitely get a better price with my links. Next up, check out this video over here where I'm walking you through the Seeking Alpha premium experience and how I use it myself to do my research. Thanks for watching. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao.